Hello and welcome to Banking Frontiers Live. This is one very interesting conversation we are going to have today into the area of GRC. And with me today is a very noted luminary in the area of information security, governance, risk, and compliance. Ladies and gentlemen, please allow me to introduce you to Mr. Naras. Naras has been a wonderful banker throughout his life and a technologist who has seen a lot of waves in the area of risk and compliance. He has taken up as consulting into the area of GRC in the Canadian market based in Alberta. And he has spent years in this field in Canada, back in India, where he started his career in a lot of multinational banks in India, private sector banks in India, a technology company like Wipro in India. And then he has been into private banks in Canada as well. Naras, welcome to Financial Technology Frontiers.
Thank you, Bhavanaars. I'll refer you as Bobo for this conversation. It's a pleasure to be having this conversation with you. And thank you for giving me this opportunity to discuss some of my views on the IT GRC space as it relates to the Canadian financial services market. Thank you very much.
So, when you see the space of GRC and risk management in Canada, what have been some of the major regulatory announcements in the past, in the recent past, which have forced the banks to rethink their regulations and also the reg tech in the recent past?
Okay, so I want to give you some sort of a background into how banking and regulation works here in Canada. The overall banking space is basically governed by and regulated by the OSFI, which is OSFI, the Office of the Superintendent of Financial Institutions Canada. It's a federal body, something similar to any of the other regulators across the world. For example, more of business resilience, more of disaster recovery, more of cybersecurity readiness, and so on. So there is definitely a lot of dialogue that's been heightened in the recent past between regulators and the financial institutions in the Canadian banking space, and that's here to stay. One of the things that's actually happening is regulators are now setting up certain deadlines for financial institutions to follow. Like, for example, the OSFI B13, we call it as the OSFI B13 guideline, basically relates to a financial institution's resilience aspects as it relates to how they want to prepare themselves for cybersecurity or business resilience or operations, where the regulator, which is OSFI, expects banks in Canada to start adhering to those requirements as latest as January of 2024. Now, considering this particular guideline has been issued just about 2 or 3 months ago, I think it was released sometime in August 2022, just about 3 months back, or 4 months back for that matter. Now, now that we are in December, the deadline of January 2024 leaves very little space for banks to start preparing themselves to meet the requirements of the regulator itself.
Now, if you look a little bit into the risk management framework, how has it evolved in the past few years now, in the last 2 to 3 years?
Well, I want to sort of address that with two angles. One is with respect to a compliance angle, which you need to sort of comply because the regulator asks you to comply. And there's no going back on that. You need to satisfy certain minimum requirements. But more than that, what has actually happened, especially because of the COVID pandemic, is the renewed interest or the heightened interest by financial institutions themselves in trying to evolve their risk coverage of that related to IT and cybersecurity. Now, if you look at it from that particular angle, not only is there more of voluntary investments into trying to come out with a better posture as far as cybersecurity risk management itself is concerned, and within the overall space of IT risk management, but also to try to see how are banks running the shop with as far as IT is concerned. Now, this is actually taken a bit more, sort of several ways, primarily because more than anything else, the pandemic has started or sort of have made us realize that we need to have more partners. When I say when we have more partners, if you look at globally too, the adoption of cloud strategies has never been more pronounced than in the last 2.5 years. The rate at which the adoption to cloud strategies has actually gone up by leaps and bounds. And banks are no by means not lagging behind. They are one of the first adopters of cloud technologies. Why I'm saying this is because with the adoption of new technologies comes new risk, undoubtedly, and therefore all these things is now coming as part and parcel of the overall technology risk management. In fact, what I see in the industry is technology risk management is actually taking its own pillar now. No longer is it being considered as part of an operational risk paradigm, or for that matter, some sort of a siloed risk vertical. But technology risk as a subject itself has gained a lot of ground in the last 2.5 years, and it's actually here to stay. And even from a regulation perspective, going back to the first point of compliance, the Canadian banking regulators do throw in a lot of work to say what is it that you are trying to do with respect to compliance as it relates to, say, your third-party management itself, as part to your disaster recovery, as part of your business, business continuity and business resilience itself. Now, these questions were not really being asked a few years ago. However, now the focus is so much on these kind of aspects or these kind of topics that technology risk, including cybersecurity risk, has gained so much of ground that banks are now trying to look at it not just from a compliance angle, but from an overall healthy risk management practice itself.
Interesting. See, one important thing, if you notice here, is banks trying to only do what the regulators want them to do, just whatever is the touch point for compliance. On the other side, forward-looking bankers have also looked to go beyond compliance, because many also treat this compliance as a business accelerator or GRC as a business accelerator. Has there been any such kind of thought amongst the bankers there that, hey, while yes, this is what is a touch point from the compliance perspective, we can make our business more robust with such kind of security and governance practices in place?
As a GRC practitioner myself, undoubtedly the subject of GRC is fast gain ground, and it's actually gaining a lot of ground today in the financial market space, and also slowly sort of getting into the other non-banking side too, such as, for example, the fintech space or the services space and all. But coming back to the financial services itself, and as a GRC practitioner myself, I'm seeing a lot of interest in this particular area, primarily because risk management, which is a core component of the GRC practice, is now starting to have some kind of a dedicated risk taxonomy itself as it relates to IT and cybersecurity risk management. For example, questions are being asked as to what is our cybersecurity risk appetite itself. Now, if I have to give you a simple, a recent example, which is sort of public too, I'm not sure if you are aware, but in the month of June or probably July, one of the core service providers, Rogers Network, actually went down for almost a full day. And because of that, several institutions, individuals, in fact, including public services, got hit. What it basically means is the availability of services to serve the customers is actually got impacted, because not because of the financial institution, but because of a third party. So with respect to risk management and risk verticals, this risk management practices itself, now questions are being asked: what would you do if such a situation were to arise that's going to impact your service providing ability to your customers? What are you going to do? No. So which basically takes me back to start thinking, if I had to build a risk appetite statement itself especially related to IT and cybersecurity, what would those core elements be? So similar to a credit risk, similar to financial risk, similar to market risk, technology risk, embedding the cybersecurity component with it itself is actually gaining a lot of ground. And therefore, all this thing leads to a better GRC practice in a financial institution as the days go by. Basically, now find space to discuss right at the executive level. Look, this is the risk you are going to sort of face with respect to technology itself, and how are you going to deal with it?
Interesting. Now, when you come to dealing with GRC, on one more side, if you see with the rampant adoption of fintechs and engagement with fintechs comes a lot of risks and compliance. How are banks actually trying to create a strategy or a kind of risk management strategy around risk and compliance when it comes to dealing with the fintechs?
One of the things which I believe the banking industry is looking forward to is with respect to trying to engage fintechs through the third-party risk management ecosystem. Some of the fintechs do offer parallel services as they do with banking, for example, credit card businesses.
Correct. So how rampant has been cyber insurance in the financial circles in North America per se?
It's as far as the financial services concerned, yeah, it's here to stay. Like I know, I've been part of conversations on that count too, with respect to how do you even mark up the required cybersecurity insurance if something were to go wrong. Yeah, there's a lot of negotiations that happen with various cybersecurity insurance providers as an institution to institution deal. But I can definitely tell you that financial institutions don't leave that to speculation. They do ensure that they get insured on that particular account. Obviously, numbers will vary institution to institution. They based upon the value, or based upon the value, based upon the volume, and so on. But yeah, it's there.
And is it still a black box in terms of how to value yourself, or there are a lot more clarity on how to get it done?
I wouldn't say that it's really a black box. It's evolving. Yeah, it's not like things are at infancy. They are not at infancy. There are practices to evaluate the kind of insurances that are required. But yeah, there are tangible methodologies being adopted to sort of arrive at some of those numbers.
Especially in this age of payments, when recently Canada has gone into instant payments. And has there been any noticeable increase in the amount of frauds that have come in? And what kind of security measures are organizations now putting into place?
One of the things which at least I've seen is with respect to how do we secure a payment channel. Technical cybersecurity practices, for example, encryption, or both of data at rest as well as in transit. Then the private keys, cryptography, basically public keys, all these things come into play just to ensure that the overall transaction is completely secure end to end. From a cybersecurity perspective, these kind of transactions are actually monitored to see, and not the content of it, but just to ensure that there's no pilferage or there's no tampering of the transaction. If there are still some man in the middle attacks and those kind of cybersecurity attacks, I'm not saying that they don't happen, but in all probability, the technical controls that are there in these kind of financial transactions today is definitely much more mature than what they were earlier.
Interesting. Now, as a GRC professional yourself, and looking into the crystal ball, how is the GRC going to evolve in the near future? Any interesting thoughts on that?
Oh, it's going to evolve, and it's going to evolve very fast. I believe 2023 will be actually an age and year for actual evolving practice of GRC, much so because, again, not just from a regulation perspective, but also overall from a risk management perspective, from a good governance perspective, there are a lot of things that need to be looked into. And this is where the importance of GRC is actually gaining ground. In fact, with some of the banking folks I've been having conversations with, GRC is going to be actually included as a separate pillar in their overall org structure within the overall technology space. That's the importance which GRC is actually commanding today, and it's here to stay. If you look at even some of the social media applications. For example, you need to look at technology risk in various pillars. Technology risk as it relates to data, technology risk as it relates to process, technology risk as it relates to access management, technology risk as it relates to vendors, technology risk as it relates to cryptography, technology risk as it relates to networking, technology risk. Well, I can keep going on and on and on, but there's so many pillars within technology risk today that it's no longer, just have about a bunch of 10 or 15 Excel sheets and start working on it. No, I think those days are sort of being sunset, and the age for evolving GRC practices into a more formal way is the way to come.
Wonderful. Thank you very much, Narasimham, for a wonderful conversation here. And you have really thrown a lot of light into areas which are evolving.
Thank you, Babu. Thank you very much. I really enjoyed this conversation with you. Thank you very much.
Thank you so much, Narasimham.